right. Good morning, everybody, and welcome. It's TheoTRADE Chat. It is Don Kaufman here, bright and early. It's April 11th, 2024. Spoos, excuse me. After being down quite substantially in the pre-market, we are about 40 handles, almost 50 at this point, off the lows. So S&P is at 1 point, sunk all the way to 51.73. Take a look where we're trading now. They like me. This is actually PPI data. I have to tell you, I knew PPI was coming out this morning. I think most people knew that PPI was coming out this morning. No one knew that PPI could actually move the marketplace. I would be, though, a little bit reserved in attempting to have much of a bias this morning. I recognize that we've had a rally back up, but if you're taking a look around some of the usual suspects, yeah, there's still quite a bit of risk on the table. You know, one of the things, I'm going to bring this up a couple times this morning, there is a huge expected move for today. Huge, I tell you. The S&Ps have a 42.61 expected move for the day. That is huge. Considering if you're looking at the marketplace right now and you think that's a rally, no, that's unchanged. So we've rallied back at this point to unchanged. When you have like a $40 expected move, price action you're seeing right now is nothing more than noise. Now, there is one bullish area I perceive in the market. That is the fact that volatility, after actually rallying up pretty considerably overnight, has actually dropped off. But, okay, as I say that, volatility is kind of flatline, might even be picking its head up off the mat over here. I am telling you, on a trading session like this, check whatever you're thinking at the door. We're going to open with a few of the big tech stocks strong. Do not trust this as far as you can throw it. It's $4 inside of NVIDIA. It means absolutely nothing. Meta was up quite substantially in the pre-market. It's already fading coming into the bell. Taking a quick glance over at the financials, they're flat into this. Again, it's not what you think. Could we rally? Absolutely. But come in here with open to two-sided trade. I think it's going to serve you a little better than looking for just, you know, the absolute, we always bid up, and we very well may have a bid back under us. So we're going to come into the cash open. The advanced decline line, it'll be positive. Like, I get it, it'll be positive. The ticks are going to be positive. But in the back of your mind, if you're not thinking about the expected move and the significance of it, now you're doing yourself, again, kind of a grave disservice on an intraday basis. Let's come to today's. At the bell, as I was saying, advanced decline line is quite exceptional to the upside. Don't think for a second that that's going to last. This is going to turn into a slop fest. Why? Take a look at the financials right out of the gate. Remember, those were actually up in the pre-market. They're already down 8 cents. The energy sector is also relatively flat. There is nothing right now sustaining the bid other than maybe Microsoft. That's it. Google's got a little bit of price action. This is going to be a very fast cash open. Ticks this morning, they're positive. Again, I just don't think you can trust them as far as you can throw them though right now. So I want you guys to understand, I'm not categorically speaking all bared up. I'm all bared up with no place to go, but I'm not. I'm just trying to look at this as objectively as I possibly can. As I said about the advanced decline line, it would not surprise me to see this thing more in a 50-50 here. We're going to waffle back and forth and have the possibility as this morning progresses of some really significant moves in the marketplace. As I am saying that, I did want to point out, which of course everybody was looking at in the pre-market. NVIDIA was all kinds of bid, right? There's nothing going on in here right now. The stock is actually unchanged. Meta, which was up, you know, I think I saw a print of 524. Yeah, I did. That print 523 and change. Meta's actually seeing some sell side activity. So what was the big bid under the marketplace was Microsoft. Again, wouldn't trust it as far as I can throw it. There is a change in the air, and that marketplace, it's continually bid. It only goes up. People, it's been 3 weeks now. 3 weeks. Take a quick glance at auto expected moves. 3 weeks since we have substantiated any new highs. Here is actually 1, 2. You're in the 3rd week. There's been no new highs. 3 weeks. The marketplace has seen great two-sided trade, and there's no reason to assume otherwise today. I think that the assumption is the S&P sold off by what, 58 points yesterday? The assumption is we'll be up 58 today. It's over and done with. I get it. I totally get it. But I don't think you should have that kind of chip on your shoulder, because you're going to get your head taken off in a marketplace it's angry out there. And the PPI data, just an opinion, the PPI data is usually taken with a grain of salt. It's not exactly one of the Fed indicators of choice. It's the market actually just, was surprised by it, shot up, but it's more of a wing and a prayer. Nevertheless, if we do rally today, okay, anticipate that rally, the only place it could come from is tech right now. You can see the financials are kind of being debased early on. The energy sector, interestingly, the energy sector, it has flattened out throughout the course of this week. In fact, the best way to look at it, when I say it's flattened out this week, I ain't kidding. This thing is massively unchanged. The energy sector is kind of taken out of the equation. Even in yesterday's sell side activity, okay, it was less than stellar in there. So it's a day that once again belongs to big tech, and big tech has seen some pockets of struggling lately. I was talking about flat over the last 3 weeks. Take a look at like Microsoft. Microsoft is, almost into a month of nothing special going on. Obviously, we could point out Apple. Apple's still sitting near lows. Amazon, okay, a rip back to the upside yesterday. This is going to be worth watching today. Amazon has become quite the little linchpin inside of big tech, as stocks like NVIDIA are no longer taking, this huge leadership role. So NVIDIA in yesterday's trade comes roaring back. And again, NVIDIA, just to show you, comes roaring back in yesterday's trade and completely goes flatline. NVIDIA, what was interesting out of yesterday's trade, it did not have, okay, crazy like call buying over here. The stock bid up early and all of the trade dissipated. You're seeing something similar in there today. This is a big move early on. It's up about 1%, but it doesn't seem to be enough right now to grip hold of the entire Nasdaq. And the Nasdaq is starting to propagate a couple of gains. Again, too early to be able to grasp any feel here for trade. So Meta, speaking of Meta, anybody do the Meta trade yesterday? So I did a Meta trade yesterday. I scratched the Meta trade. What I mean by scratched, I opened the trade for 665, okay? Open 665, open, closed for 665. People, that's the way you gotta lose. If you're gonna lose with a little bit of dignity. But if you're going to take a losing trade, that's the way you lose. It's scratch. I got out literally at 665. I waited for that one too. Oh, I got to get out at 665. Somebody was asking me why I got out 30 minutes before the close. I didn't know anything. I'll tell you what I did know. Okay, I didn't know we're going to rally in here anyway. I got out right there. I got out right here. Okay, it was almost the low of the day. It was not the low of the day. Okay, there was periods earlier on where I probably could have gotten out just as advantageously, but I didn't know anything. What I did know is I had crap to do in the last 30 minutes before the cash close, and I didn't want to have to worry about the trade. It happens. It happens to the best of us. So the PPI comes out this morning. Go back to the okay, let's talk about my PPI. The PPI comes out this morning. The marketplace explodes a little bit higher. So the PPI, okay, producer price, yada, yada, yada. Who the hell cares? Because again, I believe that the marketplace is, on a wing and a prayer on this one. Speaking of wing and a prayer, take a look. Financials continue to see sell side activity. The energy sector is going with it. The rotation you're looking right now, you're like, oh, they're going to rotate into tech. They're not rotating into tech. The only place that has a strong bid under it right now is really NVIDIA. There's nothing else that has a strong bid. I mean, Microsoft, flimsy at best, right back in the opening range. NVIDIA is the only place that's seeing that bid. And I'll tell you what, NVIDIA, there's definitely option volume driving that, which we'll see if it dissipates. So you got to understand, NVIDIA can continue to move up as long as they're buying calls in there. But if the call buying stops, so does the stock. And yesterday, the point that I was trying to make that I think I did a pretty crappy job of, the point I was making yesterday, it was all well and good, but this only lasted like 15 minutes and then they just stopped buying calls and just totally flatline. We've seen this time and again. NVIDIA, okay, I think this thing is on the dance floor for a significant move, and I don't think it's going to be a positive one. So I keep saying on NVIDIA, okay, you're still in kind of that this same range. NVIDIA, though, yesterday they called it corrective territory, and of course it bid back up. Look for a major move in NVIDIA. The options marketplace has clearly, decisively changed in this market. There's still a $20 expected move in NVIDIA between today and tomorrow. You should see every ounce of that and then some. There's huge volume, though, starting to hit this marketplace in terms of some of the S&Ps. I don't want to diminish, although I'm looking in NVIDIA, okay? Just so you guys know, I'm actually on the other screen looking at the S&Ps. That's big boy volume. You say what you will about today. This is like if you just tuned in the last minute or two, you're like, oh, whatever, man, the S&Ps are flat. There is a crap load going on today for the S&Ps to be flat, okay? Look at the contract size in the previous minute. You know, you're doing 8,500 contracts, you ain't got a clue, right, as to what's about to happen to this marketplace. Contract size is huge by huge. The bond market today seems a little bit more quiet, which is just fine. So yesterday you had a big day in the bonds. Look at the big selling in bonds. Speaking of which, I believe there's going to be a bond auction later today. They're going to auction bonds, and the bond auction, okay, went very poorly recently. So there's been some auctions. So it's not so good. It's not so good in the auction world over there. Look at this. As I was saying, the 50-50 advanced decline line, it's back. Okay. I can't help but look at the marketplace and think that we're slipping. There's slippage in here. As I said, 15 minutes ago when I popped on here, okay, if you don't have an open mind to a two-sided marketplace, okay, you're not watching this marketplace. You don't understand what's going on. The contract size in here is too big, okay, for one-sided markets. This is hedging activity is just huge in here. And when I say that the contract size is too big, okay, for a one-sided market, or what's the difference? When you have a two-sided market just simply means, like, lately, look, we've seen days where we just go up and we go up and we go up, yay, and we go up some more. In a very one-sided market, hedging is very straightforward, okay? As you actually take on delta risk, okay, you curb the delta risk. In a two-sided marketplace, that kind of chaos, two-sided marketplace just simply implies we can go up and we can go down. Here we go. But in a two-sided marketplace, the hedging activity, it's far more chaotic, and you got to do a hell of a lot more size because your delta keeps whipping around. And the more your delta whips around, the more you actually have to hedge. Now, I used to do this crap by hand back in 1998. Back in 98, yes, when dinosaurs roamed the planet, my kids ask me some ridiculous questions of 98, and then they sit there and giggle in the corner because they actually know. Were there cars there? Yes, but there weren't cars like today. We had a Mitsubishi 3000 GT. We didn't have one, but my son actually knows. He's like, oh, that was actually a really cool car for its time. Anyway, it's the crap I deal with. The contract size is huge when you get two-sided markets because the algorithms are constantly firing off. I really want to drink this damn coffee. It seems weird when I got the damn camera on. I just want to drink my coffee and be left alone. Anyway, the instability of markets of two-sided trade wreaks havoc. You got to trade a lot more contract size. Now, if we go like, trend up or trend down, that can absolutely change. Corey always talks about, trend day tactics and so forth. And right now he's probably thinking like range day. Okay. But that's okay. But the contract size here is it's massive. I am not, again, convinced we're going higher or lower today. I'm not going to sit here and preach to you, this way, that way. Look, this is a market you're going to have to read a little bit minute to minute. And this is the kind of crap where I like. Okay. Why do I like it? Because I was born in volatility, people. All right. Markets like this actually make sense to me. Whereas, when you're a one-sided animal for months, it's just stop the insanity. But this, okay, and ironically, the insanity makes a lot more sense to me. Very notable, volatility is picking its head up off the floor. Pay attention to that. If volatility starts to pick up any more, we are actually going to see some selling. I want to reiterate a significant point. This is the SPX, the mother of all products. The SPX this week, as we well know, okay, has an expected move of almost 90 bucks. But I said this earlier, I'm going to say it again, and I'm going to make sure that you guys listen. Today, we don't have to hit the expected move for the day, but the expected move, the daily today, and I don't usually make a big deal about the daily expected move. I don't usually make a big deal about this. I'm making a big freaking deal today because the expected move again is 42.61. Actual move right now, massively unchanged. You better pay attention because what can happen in a day like that is there's just a crap load of gamma risk. Because everybody's like, holy crap, a $42, expected move. Lots of firms go out there, sell some premium. And if we start to, for instance, to roll downhill, we'll just, right off and into the sunset. $40 move, okay, is real and it's spectacular. So there's a crap load of intraday risk today. And it's an interesting and ironic twist to this. So right now we're trading 51.61. Furball. The lower edge of the expected move is 51.15. The math work for you? Close enough for me. I don't know if we're going to hit the lower edge of the expected move, but I will tell you this. If you guys listened, anybody here listen to last night's video? Okay. Look at that. Nobody. Okay. No one likes me. I seriously got to get out more often. All I do is come from like here. I go back to the rental. Sometimes I go to the gym and I come here and I go there. Not even allowed to go to like stores anymore. Hanging out, Costco. Can't even eat the damn hot dogs anymore. Got nothing. Anyway, if you watched the video last night, I did have an opinion in the video and had a little bit of a chip on my shoulder. So it was a riveting video. So a couple weeks ago, I caught my daughter actually looking at like one of the TheoTRADE videos, and I'm like, don't watch that crap. And she goes, oh, it was riveting. The sarcasm, it comes out of me and it ends up in the children. It's not good when it comes out of your children, though. Really, it's not good. Find things in your own personality when you have kids that any real defect in your own personality gets amplified by 10 times in a child, and they use it against you. It's horrible. I'm sorry what I've unleashed upon this world. Anyway, the chip on my shoulder was for this lower edge of the expected move. Look, it doesn't have to happen, but it makes a lot of sense. And we got down pretty good this morning. I mean, we were 40 handles lower. So if you look at 40 handles lower, you could, in fact, say that overnight trade, we were right in that neighborhood. We were, okay? I was there, man. I was there. So question is, are we going to retrace back down to there? So we were exactly about 40 points lower in the SPX. Basically takes you right into that realm. We were close. Okay. hold everything. Okay. What video? The evening video, man. There's an evening video. S&Ps look like they're actually going to break right here a little bit lower. Okay, and I'm basing that, by the way, when I say S&Ps are going to break a little lower, I'm not looking at the chart. Okay, I was looking right here. The volatility looks primed to pop, which means the S&Ps are going to head lower. So that just something I do. Okay. Anyway, sorry, I'm cracking up. Kevin's like, I too am significantly more sarcastic having come to TheoTRADE. I'm sorry about that. I'm really not. Okay. That's more sarcasm. What the hell? Okay. Can't even not be sarcastic when you're trying to talk about sarcasm is not, it's good. Sorry, I'll just continue on over here. So NVIDIA, I'm coming back to it because, as I said, it was all call buying in here, and that call buying has been fading recently. Look at this, the call buyers, they dissipated completely. So the number of calls being bought is about the same as the number of calls being sold. Look for some sell side activity to start to hit NVIDIA here. They either got to get back on the horse and buy some calls, or this stock is going to start to slip. So be aware of that. Any other standouts in the tape? Google, I mean, basically Google's still sitting at all-time highs, which is pretty shocking here. I mean, it literally is at all-time highs. If you're, you want to get bearish in a marketplace, Google, in my opinion, is probably one of the places to do it. But, and again, specifically for today's trade, that's not up there enough today. I think this is a really high risk idea. Okay, really high risk idea. You can get away and actually trade a 50 delta for today. Google might be worthwhile. I'm looking at the idea that Nasdaq is going to fade today. Okay. Do I know anything? No. But I'll tell you what, I don't mind putting a little skin in the game for this one. Okay. Come on. No. There you go. This platform is slow. Anyway, I'm going to put this on early in the trading session. And I'm going to tell you right now, before I even post it into the chat room, this is not a high probability trade. I don't have much to go on here. What I have is the strongest stock in the Nasdaq that I'm trying to fade in a marketplace that might fade, but it might not. Okay. I mean, this is a pure, unadulterated coin flip. It's a pure, unadulterated coin flip. I put the trade on incredibly early on in the trading session. Okay. And again, there's trades like this, like sometimes like, oh, I don't even know if I want to paste, post this in here. This one's going to take all day to play out too. This one's going to take all day to play out. I don't think it's going to be an easy trade. Google's basically up $1.50 this morning when I executed into this. By the way, I don't see anything fading in here. I am telling you, all I am doing in this trade, easiest thing ever. I'm fading, okay? Fading means I'm taking the other side, okay, of the strongest, monkey on the block. That is it. Without an equivocation, that's it. I'm just fading the strongest monkey on the block. So why do it this early if I say it's going to take a lot of the trading day? I'm doing it this early because I know, okay, I'm not going to be able to predict if the S&Ps are going to get hammered. Like, no idea, okay? I realize, though, that some of the contract size is starting to fade. That's not helping my cause at all, okay? But Google has been, all right, kind of the mainstay in this marketplace. I'm also thinking to myself, if we rally back a little bit, okay, it could actually be some of the financials, maybe the energy rallies back and we start to fade some tech. So there's some rotations kind of underway. I think this, again, it's a coin flip. And when I say it's a coin flip, it's like this 50-50 bet. And yesterday I scratched a trade, okay? When I do a trade like this and it's a 50-50 bet, okay? And I like, Tim was saying Google's also at the expected move, the upper edge of the expected move, and that's fine, okay? My trade's less about that. It's a 50-50 bet with a phenomenal risk reward. I can't lose the full dollar. So I went out and I buy something for $1, but I can't lose the full dollar. You go, well, yes, you can. No, I can't because the option expires tomorrow. I have no qualms about saying I'm going to exit this thing today. I'm not going to exit it tomorrow. So what can I really lose? My guess, okay, my sense is I could probably lose about 70 cents. But if I'm right, okay, look at the risk reward in here. So if I'm wrong, let's get crazy. Let's say I can even lose 80 cents if I'm wrong. Let's put some time decay in there. Let's really factor in. If I'm wrong, I can lose about 80 cents. But if I'm right, basically a dollar turns into probably about 280. But if I'm right, I can make about $1.80. Like, why wouldn't I do that trade? Like, I think that that's viable. And it's when I say that I'm doing a trade, my directional bias is a 50-50. Okay. If you think you know something about a marketplace, that's phenomenal. But I'm coming in here and I'm actually assuming that I don't. So at that point, it's about selection of the right option, and then putting the bet out there. And that's it. And it's a trade like this. Okay. I like trades like this. And I like trades like this because even on a 50-50 bet, you have a much better risk reward scenario than afforded in a lot of other positions. And Google is just look, it just looks like the thing to fade to me today because on a percentage basis it was up the most in a really destabilized marketplace. Speaking of a destabilized marketplace, and again, I'm under no illusions that we can't just rip higher. Okay. I'm not saying that we're going to sell off. My 50-50 bet, though, pays off if we sell off a little bit. And I much prefer to take bearish stance on an intraday basis. People always wonder why, because it brings the heat of volatility. The options make a lot more in the bearish stance. They make a lot more in bearish stances. So that's just my it's preferential. It's preferential to me to want to trade. Be the bear. Be the bear you always wanted to be. So here we are, almost 30 minutes into the trading session. Where are we? We're massively unchanged. The contract size in the S&Ps, like for a moment, I was in here and I'm like, oh, it's dying down. And then all of a sudden, boom, back over 6,000 contracts. This crap is unstable. It is unstable. It is a pissed off marketplace. Okay. I don't care if you're looking at the S&Ps right now and you're, nothing's going to happen. You're wrong. It is going to happen. You don't have a day with a $42 expected move where nothing happens. You'll easily move 20 handles today. Easily. I said that before the market opened, the S&Ps were up 10, and I'm like, just look, that doesn't mean anything. You have at minimum, 20, maybe even a $30 expected, 20 or $30 move. That would be the inside day. To get a $40 move, that's kind of what's expected. All right, with that, and there's nothing, like, look, this trade will be here. It might come back. I don't know. Like, don't try to, you don't have to chase it. Okay, what did I fill at? 99 cents. 99 cents. Okay. What was the low of the day? Did I hit the low of the day? The low, 86 cents. Come on, you gotta be kidding me. Anyway, continuing on. And look, this is one where don't look at it all day. Don't even worry about it. You'll know. Okay. You kind of got to let it ferment for the day. My trade is not meant to be for an hour. My trade is not meant to be for 2 hours. My trade is meant to be like, hey, I'll see you in 6 hours. Okay. Let's let that one kind of bake a little bit. And if we rally and we explode higher, it is what it is. Okay. And it's totally plausible in a marketplace that we could, explode higher. Speaking of explode higher, if you're looking at Nasdaq today, it is at highs. It is so close to breaking out. Okay. It's close to breaking out to the upside over here. But gather this, the Nasdaq, even though it's moving 67 points, you want to see something interesting? Okay. Nasdaq has a 166 point expected move today. That one I actually calculated from QQQ. The QQQ had a $4.16 expected move. You take that, you multiply it by 40. That actually comes out to 166. Okay, so it's again, it's a big day with nothing going on. Okay. So David was asking, I see Boeing up a little bit today. Okay. Oh, Boeing, Boeing is not up. Boeing is down. Bad Boeing, bad animal. So the Boeing trade, wrong account. Boeing trade, where is my Boeing trade? Okay. In the Boeing trade, So the Boeing trade is up 76% in my price. Okay. But let's actually look at this from a one contract kind of point of view. So the Boeing trade is actually up. Okay. It's up about $100 since the open, but I'm losing a little bit on the option that I sold against it. Yeah, leave it alone. I mean, I'm not going to take a trade off for $70, $70 a P&L. That's it. I'm going to leave it alone at this point because the spread, it's a $5 wide spread. What's the $5 wide spread worth right now? It's worth 243. We could do better. Okay, let's leave that one alone a little bit. Still plenty of time. You know, do I have a lot of confidence in it? Look, Catapult can take a long time, you know, to kind of play out. Let it play. You know, there's times where I'll take like little winners off here and there. Okay, I have to tell you, my hesitation right now in this trade in particular, the marketplace at this point, and I have to turn it over to Tony Rago in a few minutes, but I want to get this statement out because I think it's an important statement. The marketplace at this point has thrown off, like, look, I'm not going to sit here and preach to you that we're going to sell off, but the marketplace at this point has thrown off every warning sign imaginable. It's had CPI that's hot. It's had the Fed that's not going to cut. Like, there's a lot of problems. Okay, I got a lot of problems with you people. There's a lot of problems right now. And the biggest problem that you have is, and of course, people are always going to point to a catalyst. What catalyst is going to drive this thing into the dirt? Okay. I don't know, and I don't care, but I am telling you, okay, I don't really care whether you're bullish or whether you're bearish right now. But if you're bullish, you've seen a phenomenal run. If you are not hedging right now, I think you're doing yourself a huge disservice. I think you have to reduce risk at this point because markets rarely throw off this many signs. You know, the only sign right now is that there's a lot more volatility. Like the only, you know, in summation, there's a lot more volatility here than there was any point since November. A lot more volatility in the last couple of days. But every ounce of volatility has been met with buy side, which today could be no different. Maybe we rally back up. Today might be no different. Maybe we rally back up. It's fine. Nevertheless, we've thrown out a whole lot of signs, and it's just dangerous. Okay, on a day-to-day basis. When the S&Ps yesterday, you sell off 80 and then they bounce. You know, last week we saw something similar. We sold off huge and we completely bounced. Okay, throwing off a lot of volatility signs right now. You know, read the tea leaves right now. This is not the marketplace that you were in. And I'm afraid, and I'm dead serious about this, if you, okay, are in positions and you're not reducing risk, okay, I don't believe you're going to be able to get out of those positions because this is a marketplace that is, there's evidence everywhere. It could snap 100, 150 points like that, and that's the S&Ps. You can easily move 2 to 3% in a snap marketplace. And again, you can see that the volatility already sees, all right, considerably more risk. Like the marketplace ain't moving right now, and we're still sitting at the highest volatility. Again, if you close the market right here, it's almost the highest closing volatility of the year. So I don't give a crap what you think about what happened a few weeks ago. You know, it doesn't make any difference. All right, you're in a different marketplace right now. Okay, and it's a marketplace that, you know, people will be like, oh, CPI came out and snapped the back of the marketplace, but it didn't. You know, we're only down 58 handles yesterday. PPI came out today and we rallied off of it. Okay, it could be a bond auction, it can be anything. We are primed right now and looking for a match in a pool of gasoline. And that's it. You're primed right now, though, for some wild freaking moves in this market. That's the only thing that I can see. You know, I'm not going to sit here and preach to you, we're going down today, we're doing this. Okay, we are primed for really wild moves because you don't see products like VIX move anymore. And I'm not a big proponent of VIX. You don't see products like VVIX, okay, this high for nothing. So now the volatility index is, if we closed right here, it's its closing high. all volatility points to one thing, okay? Irreparable damage can be inflicted at any point. Doesn't mean it's going to happen, okay? But it is prime for irreparable damage can be inflicted at any point. And if you're not hearing that, okay, you need only look at the S&Ps in the last couple of seconds, okay? I know you're going to point to it's a catalyst. You got to stop with that crap. No one gives two craps about what the catalyst is. All they look at it is they're just throwing, M80s at the marketplace non-stop. Okay, don't get caught because I'm afraid that on the retail side, you're not going to be able to get out. What happens to people is they don't get out of a position and then it moves against us. And then they're like, just wait for the day that we bid back up because we always bid back up. And it moves against you and it moves against you and it becomes this unrelenting push lower that has no bid back under it. And you're real close to something like that occurring. So again, you have been forewarned. By the way, you see Google coming in over here. Leave the damn position alone. Okay, leave it alone. I don't care. What if we're up 100%? So what if we're up 100%? I'm not here for 100%. Let's see 200%. Call me crazy. There's a $40 expected move today. $40 expected move. You think I'm actually going to bail a position in Google because we moved 10 handles over here? Okay, leave that crap alone. Nvidia, keep an eye on it throughout the course of the day, just in the backdrop over here, because if there's going to be a big player in the room, okay, it's Nvidia and or Meta. That's why I took the shot yesterday in Meta. I scratched my trade, literally in for 665, out for 665. The best way to lose is when you scratch. But taking a look at Meta, this one is also, okay, searching for a catalyst, basically all-time high. Nvidia is already in corrective territory. But if Nvidia is in corrective territory, this bid back could actually be sold into. So yeah, behold, S&Ps this morning when I started were up 10 handles, S&Ps, wait for it. They're now down 9 handles. Come on, I wanted 10 handles. The truth be told, as I said to you guys, the only chip that's on my shoulder is lower edge of the expected move. Look, that's a long way away. It's like 40 points away. So sit tight on that thought. I'm not all bared up, but definitely some signs of volatility in the air. So stay tuned. Tony Rago is going to come on here momentarily. And when Tony comes on, he is going to be trading some Nasdaq futures with you. On Thursdays, I duck out a little bit earlier, but I'll be here the entire trading session. I can't leave my office today. I can't. I got crap to do, people. We also have Inner Circle coming up here in the next hour or so. So I'm going to be a little bit of a busy monkey. I believe right now, look at the volatility futures. Okay, I believe we're actually going to see volatility futures pop maybe a little higher and the S&Ps are going to start to go for it. So we are in wide open territory over here. That doesn't look like much. Like this doesn't look like much, but it's a really big move. It's a really big move. And if we do see some slippage back to the lows, okay, then we're right in striking distance of our lower edge of expected move. Stay tuned. Tony Rago is going to be coming on here right now.